Hi everyone, welcome back to the Property Finance Podcast and carrying on our frequently asked questions series. Today I want to talk about what actually is included within a Bridging Finance AIP. So often we'll send the AIPs over to clients. We normally send a little spreadsheet which kind of breaks everything down and shows a bit of a detailed view of what each lender is offering. But it's very common that when we send out the AIPs, clients will come back to us and they'll say, well, what does this mean? What does this mean? What does this mean? So what I thought is if I just do a quick podcast, I mean, obviously I can't share the AIP that I'm going to be referencing today for obvious data protection reasons, but it will just give a bit of an idea of when you get a standard bridging AIP, kind of what some of the common terms are. So what will happen is it will be laid out normally across a page, a couple of pages. What it'll do, it'll very briefly detail out basically the outline of a deal. So the address of the property, the name of the borrower, the type of property, residential, commercial, etc., what charge they're going to be taking, so first, second charge potentially. Then it will normally have the term of the loan. So it will say 9 months, 12 months, 6 months, however long the loan's going to be. And what they'll normally do in brackets or maybe on a separate line is they'll put a minimum period in. So what they'll say is, on this one I'm looking at here, it's a 9-month term on this loan, but there's a minimum of 3 months. So what that means is if you exit that bridge within the first 3 months, you still pay 3 months worth of interest. So you exit month 1, month 2, whatever, you're still paying 3 months worth of interest. As soon as you get past that, obviously you just pay for the interest that you've used at that point. Then what it'll do, it'll break down the loan facility. So in this one, you've got the facility amount, then gives the amount, the total facility that they're lending, so the amount that you would essentially have to pay back. It then puts down the interest rate. So on this one, it's 0.99%. It then says whether it's serviced, deducted, or rolled. Now, what will happen if it's serviced? Obviously, you make those payments on a monthly basis. If it's deducted, all of the interest is taken off up front. And if it's rolled, the interest is rolled on top of the facility. So the facility amount they're lending is what they're lending without interest. In this example, it's deducted. So out of that 210,000, they'll take the interest out of there as well. So on this one, it then says monthly payment, not applicable. What then happens is it will then say, if you're part retained, part service, for example, it may say that you have to pay the first 3 months worth of interest and then the remainder of it is taken off. And then what will happen, it will break down the fees. So on this one, you've got a facility fee, which is your essentially arrangement fee. And that normally equates to approximately 2%. Of the facility amount. You then have, if there's a broker fee, that's detailed down separately. You then may also have an admin fee as well. So the lender might charge an admin fee, sort of £900 to do the admin. Obviously, with brokers, we don't charge an upfront fee. Some may do, but we don't. Some lenders don't charge an upfront fee. Some do. So you may or may not see that on there. There's also, on this one, it lists down title insurance. So in this one, it's about £330 for title insurance. That saves you having to do searches and things like that. Not every lender is going to be able to accept that, but there is that option potentially with some lenders for them to do title insurance. Saves you having to do searches and things like that. You then have, it will list down the interest amount that's deducted, and it will then list down the total interest. If it's all retained, those two numbers will be the same. If you're part retained, part serviced, obviously those numbers will be slightly different. So it details down all of the interest that comes off. You then have, if there's an exit fee, on this one there's no exit fee, but you may have a 1% exit fee, for example. And then what it will do is it'll then give you the net loan amount. So that's normally the facility less the arrangement fee, less the broker fee, less the interest. That net loan amount is the amount that gets sent to your solicitor, less legal fees. So what will happen is, for example, in this example, it's 183,000. What will then happen is the solicitor fees are then listed underneath at 1,150. So what will happen is those solicitor fees are for the lender's legals. So what happens is the lender will give their solicitor £183,764.72, as according to this, but they'll then retain £1,150 of that. So approximately 182,000 would then go to your solicitor to then obviously go towards the purchase. After they've listed all of those fees and everything else down, what they then do is they'll then go through essentially the metrics of the deal. So for example, here they've got how much is the security worth, what the GDV is. Obviously on a bridge, GDV is not necessarily applicable. They'll then put down the loan to value that they're at. So most of the time they're not going to be 70, 75%. They'll then also put down their max loan to value. So in this case, 75%. So that just gives you an idea if you're not quite at full max loan to value, there is some scope to increase. And then what they'll do is they'll then list out loan to GDV and max loan to GDV as well. But again, because it's a bridge, they're irrelevant essentially. And then what will happen on the second page, or maybe at the bottom of that first page, is they'll normally put a load of terms and conditions. So you'll then get that list of terms and conditions, which you can then go through, and you then have an idea of the next steps and everything else. That just gives you a really quick whistle-stop tour of what's included within a bridging AIP. It's not massively detailed. It's just over one page. Obviously, the legal charge is significantly larger, and your solicitor will go through that with you in more detail. But as a one-page document, this gives you a fairly good idea of what's going to be included on there and the approximate fees and things that are going to come off. But like I said, normally what we do is we'll kind of put all of the lenders into a little spreadsheet for you, so you can see all of these metrics lined up against one another. But it's just helpful to know next time, for if you're going for a bridging loan, what sort of things are going to be on that AIP. So hopefully that's been helpful. I'll catch you on the next one.